Good afternoon, everybody. It is Monday, April 24th, 2 p.m. Eastern. Hope you had a great weekend. Going to go over an ETH trade review from a trade that started last Friday and has played out over the weekend. And then we're going to check in on our charts. The bulls are attempting to get some bounces going, but still struggling to do so. And going to talk about a key week that we have ahead of us in the markets with a bunch of tech earnings coming up. So, getting right into it. Getting rid of our taskbar. So we've got Bitcoin had two daily inside bars, essentially break bull, and then zero follow through, dropped down and broke the low. So in the short term, we have a bull break with zero follow through, and then that confirmed a bear flag with a bear break, but it's now a bear break with zero follow through. So what does that mean? For me, that means keep an eye out for a megaphone. And a megaphone is a pattern where you see resistance breaks, support breaks, with no follow through. So if I were going to draw that just as a visual guide, I would have a downtrending support line, an uptrending resistance line, and again, just a bit of a visual guide at this point. But if we were able to see the bulls recover from here with an hourly uptrend, which still has a lot of work to do, you can see it's the bear break straight into a 1% bounce, but anything under 277 is an hourly lower high. If we can confirm an hourly uptrend from here, then we're going to call it bear exhaustion, essentially, because it'll be a break of the low of consolidation that we've seen to this point with zero follow through. And when you break a support level and go straight into a notable bounce, that shows you that there's nobody left to sell their longs and there's nobody left to short on the support break. And that essentially is bear exhaustion. So not enough to say that it's bear exhaustion at this point, because if this bounce just rolls over and then sees a new low, it's just a continued downtrend. You have to see the bear break, which we saw, into the trend reversal, which we have not seen. So overall, the bears are still comfortable at this point, and we are in a downtrend on the daily, the 4-hour, and the hourly. So all short-term time frames are in a downtrend, burden on bulls to shift that. That being said, we are looking for a weekly higher low to be the most likely result of this consolidation. And that's where it can get a little bit tricky in terms of technical analysis. Well, I'm bearish on a short-term time frame, but I'm bullish on a longer-term time frame. Which matters most to me? It depends on whether you're day trading or swing trading. And that's what we talked about in the last live stream, where, if you're in a longer-term hold, we're going to see weekly consolidation. It's inevitable. As a part of an uptrend, pullbacks happen. The question you have to ask yourself is, are you going to be sitting through the weekly consolidation, or are you going to exit all your longs before that happens so you don't have exposure on that pullback? But Bitcoin's looking for a weekly higher low. We're watching EMA 12 support. There is a support zone. Really, the only support zone nearby is 26.5 and 26.6. And after that, we'd be looking at previous support or previous resistance, now support in the low 25s. So the bulls really want to hold this mid 26,000 support zone. And I keep pointing out the similarities to gold because it is very similar to gold. Gold started its weekly consolidation a bit before Bitcoin. It's looking to hold weekly EMA 12. It's still in an uptrend on the weekly time frame. So again, I'm just keeping an eye. I'm not looking at gold and saying Bitcoin's going to do what gold's going to do. I'm looking at gold and saying Bitcoin and gold started syncing up with correlation when the banking narrative started a month ago. And they've been very similar since then. Gold gave a little bit of an initial clue that weekly consolidation was coming into play. Bitcoin then followed. And so it's just a little bit of a guide. It shifts my confidence or probability needle. If gold were to see a weekly bull flag confirm and new all-time highs, I'm looking for Bitcoin to give us the weekly higher low. And it would make me more confident that a Bitcoin weekly higher low is coming. So just a little piece of the puzzle. Again, I'm looking at so many factors. I'm looking at the NASDAQ. What's the dollar doing? What is Bitcoin doing? What are alts doing? And I'm looking at now, what is gold doing as one little piece of the puzzle to try and get the bigger picture of things. So Bitcoin is bearish in the short term, but looking for the weekly higher low. So it's up to the bulls to prove to us, again, on the hourly time frame as step one to try and shift momentum. Also checking in on the crypto stocks, which I have been trading a lot more actively than crypto recently. But I'm watching Riot and MARA, these miners, to try and get a daily bounce going as well. We've dropped 30% in the last few days, And today is an indecision candlestick after very convincing, well, we'll see where we close in 2 hours, but very convincing closes at the low of the day 3 days in a row for Riot and MARA. And now they're trying to show an indecision candle. And an indecision candle at the bottom of a big pullback means watch for the scales to tilt a little bit. Supply has been outweighing demand for days, and now they're evening out a little bit. If we were to close, that's what a doji is. So a reversal doji is when you have the scales tilted one way, the entire way of a trend, and then the scales even out. And that's the doji showing you, well, the open and the close is the same. Now we're evening out. Can the scales tilt the other way, where demand starts to exceed supply and some shorts cover and some bulls buy the dip? So that remains to be seen until tomorrow. But again, just another thing that I'm watching for, looking for those short-term scales to tilt. And then I will be watching for a daily lower high to eventually be the result of that bounce. The dominance chart, again, I just check in on it very closely, or I should say very quickly. And what I'm looking for is any clear information, and the answer is no. Bitcoin and altcoins are doing the same thing over the last few days, and there is no difference here. So no information. Altcoins and Bitcoins doing the same thing. Great, got it. See a dominance chart. That took all of 20 seconds. Sometimes there's information there, sometimes there's not. So ETH, we're going to do a quick trade update. First, we'll do the regular technical analysis, and then I'll go over the trade review from the last live stream on Friday. So same thing as far as, the inside bar has got a little bit of a bull break, but no follow through, straight into a bear break of the low. And same thing with Bitcoin right now. It's a bear break with no follow through. We've got to confirm an hourly uptrend. We haven't even started an hourly bounce. We've got to bounce, top out wherever we're going to top out, confirm an hourly uptrend if we're going to call this a bear break with no follow through. Weekly time frame, same deal. We're looking for a weekly higher low. We've got EMA 12 support. So longer term, we're looking for a higher low, but shorter term, we're looking for lower highs as long as they continue forming. Checking in on the NASDAQ real quick. We're looking for the NASDAQ to give us an hourly lower high as a result of this bounce. Still 5-minute uptrend at this point. So I have to see a loss of the 5-minute uptrend for the NASDAQ to give us an hourly lower high. So ETH, same thing. Don't really have to repeat anything. Same thing as Bitcoin. We look at ETH, BTC, and it's trying to set a daily higher low. Shorting some ARK, covering some of that short. Unrelated to crypto, so I'm not going to go into that trade. But ETH, BTC is trying to find a temporary bottom, but still struggling to do so. And as long as we're in this downtrend of lower highs and lower lows, Bitcoin is slightly stronger than Ethereum. The initial bounce went well for Ethereum leading the way, but then that faded. And we are back to, there's not much relative weakness of Ethereum compared to Bitcoin. Again, we're doing mostly the same thing, but we can say that Ethereum is slightly weaker than Bitcoin over the last, 3 days of trading, essentially, 2.5 days of trading. So the trade that I was looking for on ETH when I last spoke and you listened, was I was looking for this daily bounce to take place. And in the end, I had an initial scale in that was too early, and that pretty much shapes the trade. So I had an initial scale in the low 1900s. I think 1907 was that level. And I guess we'll go to the hourly. So 1907 was my first scale in. I knew I was going to scale in a second position, and I was waiting for the stock market to close and wanting to see how the stock market was going to close. And into the end of the stock market close is when we got extreme. So I had my first entry at 1907, and then I ended the live stream saying, I'm looking for another one down here, but I'm waiting for the market to close. And so then I entered a second position at 1860, and then we got extreme. And you've probably, if you've been watching these streams, you've heard me say in the past, my bounce aggressiveness, playing bounces, matches the bears. If we're grinding down and cooling off RSI, then I am much less aggressive playing bounces. If we are free fall flushing and we're hitting super stacks are when a bunch of time frames align in extremes together, that's when I get aggressive. So my game plan was for 2 scale-ins, just a standard position size. But once things started to get extreme, I then said, okay, I'm going to go a little bit larger of a position size because the bears are getting extreme with this pullback. The hourly RSI was in the teens. The 15-minute RSI was in the teens. And so I entered a third position at about, I forget what, 1840 or so. And, you know, at this point, it's still a smaller position size. You know, back in 2017, back in the bull market of 2021, you know, I was using position sizes that were 4 times this much. So when I say, you know, I changed my game plan and increased my position size, that can mean, you know, different things. Obviously, that can be a red flag. What do you mean? You're changing your game plan in the middle of a trade, but it's just going from a standard position size to a slightly large, you know, 50% larger than standard, which for me is still well within, you know, my risk tolerance. So, you know, if I was scaling in and going all in, then that's a big red flag. You know, I wasn't planning on that, and now I'm all of a sudden all in. Big mistake. So just want to reiterate that it was going from a normal size position to a slightly larger than normal size position, which isn't out of the ordinary for me. So, and then I said, all right, well, now that I have a slightly larger position, I'm going to be quicker to scale out because I had an initial entry that was too soon. And that shaped the entire trade. If I don't have that initial scale in at 1907, and it ends up being probably a decent winner. As soon as I realize I've scaled in too soon, I accept that, you know, this is going to be at best, you know, I'm going to get back to a break-even small win trade. I was just too soon. We got more extreme than I thought we would. And so I exited a third of the position. I'll try and find my posts here. Exit a third of the position at, so here's me saying, you know, scratch the second, only 2 positions. I'm adding a third position. Target is 1860 to sell a third. So I'm in at 1907, 1860, 1840. I exit a third at 1860. So now my entries are 1907, 1840. And I've got an average of just about 1875. So I stick my stop under the low at that point. I'm back down to my normal position size. And again, because I was too early, I'm faster to scale out. If I was not too early, I would have let the trade play out a bit longer. And so then here's an update from the next day. I'm out another 1/3 of the ETH bounce play. First scale in was too early, so I'm quicker to scale out. That was on Saturday when we got some bounce follow through, and I exited that third of a position in slight profit in the 1880s. So now my break even is roughly 1870 on a third position from the initial position. And at this point, I know this is not going to be an eventful trade. Because I was too early, even if this bounce plays out, it's going to be a tiny win. If we drop down to fresh lows, it's going to be a tiny loss. And I did stop out with these fresh lows. And so stopping out on the remaining third position after scaling out, break even on the first one, tiny win on the second third, and now a small loss on the third. And so this is essentially a failure of a trade, but a very contained failure. This is how I love to lose trades, because this, you know, shows me being in control for the most part, choosing to size up because we hit extremes, no problem with that. And after that, just adjusting and realizing where I'm at rather than saying, you know, okay, now I have a larger position and I hope this bounce gets going. You know, I have to recognize from the get-go, I did not do a good job on my first entry, so I have to adjust the end of the game plan for that fact. And so in the end, it's a small loss, but it's like a half-day loser. And again, we want our losses as traders to be the kind of loss where we know I'm going to make that back next trade. I have no doubt whatsoever that the loss that I just took, I'm going to make it back next trade. And that's the kind of confidence that keeps us moving forward. Okay, tiny step back, keep moving forward. If I take a 2-week loser, then man, that's going to be a lot of work to get that back. It's going to take multiple trades. I'm going to have to, you know, stay disciplined and have a consistent win streak to get back to where I was, versus that small step back. You know, I can make that much money day trading stocks with my eyes closed. So that's the kind of loss that we want to take. So now, you know, what could I have done if I were more confident in the setup of the bounce taking place? I'd keep my 1/3 position and I'd add back on a fresh low. But that's only when we're in extremes. The RSI cooled off on all time frames that I was interested in on this bounce. And so, you know, rather than trying to babysit this trade and salvage this trade and keep adding lower lows and then selling partial into a weak bounce and, you know, paying attention for the next 48 hours, I'm just chalking it up as I entered the first trade too early, the first scale in, and because of that, I end up with a small loss. My mistake gave me a small loss, and that is A-okay. So that is my trade review. And I plan on looking for a bounce in MARA and RIOT in the short term and looking for a daily lower high short in those names as well once that daily bounce takes place. That's the next interest that I have in the cryptocurrency space. Speaking of super stacks, so Trader Pro, let's go over some of these super stacks because the super stacks are the nice alerts going on right now. And again, the super stack is when you have, like right here, this was ETH daily super stack overbought. Overbought on the daily, the 4-hour, the hourly, the 30-minute, the 15-minute. Every time frame was overbought. This signal fires off and we end up topping out. So then we zoom in. Okay, let's look at the shorter term super stacks. And we have, obviously, for the downside, because of the weakness over the weekend, these hourly super stacks showing us, again, if it's the hourly firing, it's only the hourly and below that are in extremes. That's why the daily ones are so much more of a glaring signal, because the daily tells you it's pretty much every single time frame. So the 4-hour is what marked the recent bottom, and that's where I started getting aggressive because, again, when the 4-hour super stack goes off, I know that we're extreme on the 4-hour, hourly, 15-minute, 5-minute, all the way down, and that's when I decided to increase position size a bit because of those extremes. So in the end, again, it didn't amount to much of a bounce, but it's the kind of indication where it says, okay, we know we're extreme, we know we're due for a short-term bounce, and even if it doesn't get much follow through, it's a setup where I can position myself in a small risk scenario, where if we do drop to lower lows after cooling off RSI, I can have my stop nearby and have it not be a significant loss. So when we're in a significantly trending market, and we can say that the bears have had significant trends in their favor the last week of trading in crypto, we want to be using RSI for the bears. We know we love using the RSI for the bulls. So here's XRP as an example, but we love RSI for bull entries when we're in breakout markets, when the bulls have a lot of confidence, and that's when we look for our back burners. And XRP is giving us the example of the opposite. So XRP had a grind up daily chart, grinding daily EMA 12, and then it rolled over. And this is bears clearly saying, hey, we win this battle, huge 3-day drop. So if you missed that 3-day drop and say, oh, I missed my entry, bears had big follow through, you're looking for the bounces to overbought RSI. So a bounce for an hourly overbought RSI when we are expecting a daily lower high is a good time. Again, it doesn't just mean, blindly short. It means you can establish a game plan in this area. You can be scouting a short, but you're not just scaling in blindly. You're saying, all right, I'm going to make my first scale in short here. I'm going to put my stop at this level. Maybe I'll make a second entry. If we keep heading up, it's not blindly saying, all right, hourly RSI is overbought. So, I'm short and now I just hope we follow through. But we did end up with a 5% plus pullback from the first hourly RSI hitting 70. It then popped up and hit it again. And then since then, we pulled back another 8% or so. So again, just want to highlight utilizing RSI as a piece of the puzzle for establishing trade game plans. And they are the least useful when you're trading sideways and range bound. And RSI is the most useful when you are in strong trending markets. And it is most useful against, I don't want to confuse anyone. It is most useful trying to go with the longer term trend and against the shorter term trend. So you're going against the short term XRP bull move because longer term, it's a bear trend. And just like, if I'm looking to long, if Bitcoin is blue sky breakout and I'm looking to long an hourly oversold back burner, I'm going against the short term bearish momentum to look for the longer term higher low. So super stacks and still back burners are definitely worth paying attention to in the crypto market right now as, again, pieces of the puzzle for establishing the trade game plan. Litecoin's been holding on better than Bitcoin and ETH here. You can see this daily bounce is a bit more developed. We're definitely still looking for a daily lower high, anything under 103.42. But here's an example of using the BTC pairing. And let's say I'm a Litecoin bear looking for the daily lower high on this bounce. This LTC BTC chart is a red flag at the moment because we're holding support. Here's a low, big bull move, held support, lower high. If Litecoin was going to go to the bears, right there we need to confirm that daily downtrend. But because we do not confirm that daily downtrend, we just keep the little higher lows going. So if you're a bull, this is exactly what you want to see. The BTC pairing holding support and establishing some higher lows. And if you are a bear, you can recognize this is a bit of a red flag. It's a red flag that we are not losing the support on the BTC pairing. So just keep that in mind with any names that you're looking at, because what I'm anticipating is the most likely scenario later in the week, or whenever it happens, is scouting daily lower highs. If we go down our list, looking at all these names, go to the daily time frame on all these altcoins, and we're looking at, Link. Anything under 103.42 is a daily lower high. We can bounce 10% from here and still be looking for the daily lower high. So we know the daily lower high is the most likely scenario, and we can zoom in and look for little clues that it is forming. We have not hit hourly overbought yet on Link. I can draw an uptrending resistance line as a bit of a visual guide to see if we continue to struggle at that level. So this would be, that's Litecoin. I said Link, that's Litecoin. Same thing. Scouting the daily lower high, need to see the weakness in the BTC pairing. So if I am scouting a lower high on an altcoin, I want to see a name where the BTC pairing has no support and is in a strong downtrend still. So if I look at a name like even Matic, let's go to Matic. So Matic BTC, look at the daily time frame. This is going to be a bear as long as we keep setting fresh lows. Matic BTC just hit the lowest levels in something like 5 to 7 months. So if I'm a bear, I want a name where the BTC pairing has no nearby support and keeps hitting lows and keeps having a strong downtrend. So Matic is one of them. I think Atom might have been another one, maybe not. No, Atom's not a good example. So when I look at this, I say Atom BTC, we can easily form a daily higher low here. And so I want to be cautious of that. If I were looking bearish on Atom, I would have to be cautious because if Atom BTC sets this higher low and shows an uptrend, it's a red flag for me as a bear. So again, you have to see the BTC pairings trending in the direction that you're looking for the US dollar pairings, because anything else is a potential red flag. But just to go back to the US dollar pairings, there's a ton of individual names that are looking for daily lower highs. Everybody. I can't think of a name that is not looking for a daily lower high to be the result of the next bounce. Some names don't have their daily bounces underway yet, and other names do. So Link, daily bounce underway, scouting a lower high. It's just a question of what's the retracement size. So quick lesson on retracement. If we bounce less than 382 retracement, a bear flag on the daily remains on the table. So I can say that if Link does not bounce over 760, a daily bear flag remains the most likely scenario. Link has to get to 780 plus to create the space for a daily trend change to try and take place. So the bulls have a lot of work to do if they are going to shape up a big enough bounce for a daily trend change to try and shape up. So in the short term, bearish entry short term, I would rather see, if I'm looking bearish on Link, I'd rather see 2 days, 3 days of bounce. And then I want to see, bulls tire, use up all their buying, shorts do all their covering, and then we look for that daily lower high. BNB is a bull, a relative strength bull, just in the sense that we're well off of the low from a few days ago. We have space. Look at the bounce retracement. And again, bounce retracement is another way to compare individual names. So Binance did bounce 50% plus on the daily time frame, and it has created space for a possible higher low compared to 315 as the result of next consolidation. Most altcoins do not have that kind of setup. Most altcoins are struggling to get a daily bounce going right now. Appreciate the likes. I'm now reading the chat room. What's up, Greg? Crypto OG. Hey, Dagan, congrats. First day trading. Start small, real small. All you're trying to do is build muscle memory. You're not trying to go green right now. You're trying to build muscle memory, get used to placing the order, placing the stop loss, practicing your entries and exits, practicing applying the concepts that you've been learning, and you want to be doing so with risking $10. And then once you get the comfort and consistency of doing that with $10 risk, you can then up it to $100 risk or whatever you're at for comfort. But start small and build the muscle memory to build the confidence. Education, practice, repetition, experience, confidence. That's the stair-step path that you take to go from scratch, starting to learn technical analysis, to becoming a trader. Or at least starting trading. Megaphones are tough, man. I'm telling you, the megaphones, in my opinion, and this is complete speculation, in my opinion, megaphones are a result of more and more people using technical analysis. And the reason I say that is because if everybody's looking at support and resistance and basing orders off of support and resistance, the market naturally is going to adjust to that. You're not just going to have simple support and, it's not going to be that easy. If everybody's doing the same thing, the market adapts and shifts. That's one of the major reasons why, one of the things I really dislike about Bitcoin fundamentals is people just assuming that the halving cycle is always going to result in new all-time highs. I promise, well, I can't do that. I am extremely confident that there will come a time where all the fundamentals are going to point to the halving cycle and say, well, look, every other time this has happened. And then there's going to be a time where the complete opposite happens. Because again, you cannot have everybody doing the same thing in a market and have it continue to work. The market is an evolving, and view it as an evolving, conscious creature. That's a good one. View the market as an evolving, conscious creature that adapts and adjusts to things. And in my opinion, the megaphones are the market adjusting to support and resistance, horizontal lines of support and resistance. And I do believe that the market will adjust to anything that works, consistently for a prolonged period of time. Once enough people do it, it's going to stop working. So Binance, yep, it is. Let's check Binance BTC. We're looking for a monthly high or low on Binance BTC. Is that shaping up? It looks like it could be shaping up. This monthly candle is going to close in 6 days, 1 week. And if it won't be hard to break bull and set that monthly high or low, we will then be scouting a monthly lower high to be the result of that bounce. But we're watching for this monthly bounce to shape up. Do we have a daily uptrend confirmed? Yes. Zoom out. Do we have a weekly uptrend confirmed? No. That's the next step. Weekly EMA 12 has rejected Binance BTC the last 2 tests, and we're approaching it now. We must confirm a weekly uptrend for a convincing monthly high or low to be set. Here's another lesson. So when you are looking for trend changes on shorter term timeframes to mark higher lows on the longer term timeframes, there are degrees of confidence. If the monthly candle closed right now, and then tomorrow we break resistance, technically the monthly high or low is set, but we have not confirmed a weekly uptrend. A monthly high or low has less confidence if it is happening without a confirmed weekly uptrend versus if it happens with a confirmed weekly uptrend. Same thing with the hourly and the 5-minute. An hourly bounce can take shape without a confirmed 5-minute uptrend. But we have much less confidence in that hourly bounce unless it is with a 5-minute uptrend. RFox, haven't looked at RFox in forever. Oh God, that's why. There's nothing that makes me want to throw up more as a technical analyst than gaps on charts. And if there's gaps on 5-minute time frames, hourly time frames, to me, it just means go nowhere near this name as a trader, because technical analysis is not useful. You just can't trade things that have gaps. It just shows a lack of liquidity interest. I don't really trust my technical analysis on a chart that looks like this. 11 is support. If that breaks, the weekly downtrend continues. New lower high is 14.8, but that's about as far as I'm going with this one. How do I pick coins to trade? So relative strength and relative weakness. And again, that's using the BTC pairings. There are times where, right now I am not highly focused on the cryptocurrency sector, because in my opinion, it's not any more opportunity than I'm seeing in stocks, in Riot and MARA. I mean, Riot and MARA have been giving more opportunity than most of these crypto coins, altcoins included. I mean, just look at the percentage moves. And so I'm sticking with those names. But when I am looking at coins, and when it is go time as far as cryptocurrency is the place to be right now, then I'm looking at stronger than Bitcoin, and it's those names that I look to trade bullish, and who is weaker than Bitcoin, and it's those names that I look to trade bearish. So as soon as Bitcoin fails the 4-hour uptrend and breaks daily support, which is what we saw last week before the bears took over, that's the signal of breaking that support, saying, okay, look at the weaker names bearish, because Bitcoin is rolling over, and so I want to take the weaker names bearish when Big Daddy is showing weakness, and I want to take the stronger names bullish when Big Daddy is showing strength. OP is a weekly tightening range right now. It has not broken support. So if it continues to hold its support of 201, then that's a name to potentially look for long on any Bitcoin strength. And keep an eye on how this weekly equilibrium breaks, because it's a nice one and it's been forming for a couple months at this point. So Bitcoin getting some bounce follow through, ETH as well. Again, got to confirm an hourly uptrend. Just looking for an hourly lower high to be the result of this bounce. And it might be shaping up right now as QQQ is pulling back a little bit. Got to be watching the NASDAQ for any clues. NASDAQ's looking for an hourly lower high. All right, I'm going to keep reading through here real quick. Not planning on playing any earnings report after hours. I've learned my lessons that playing earnings reactions before they happen and after hours is not good for consistency. Too much gambling, too much guessing. At least on the reaction, you have levels you can go off of. But my biggest loss of 2022, and it was a big loss, was playing a Netflix little bounce on its earnings reaction. I did everything perfectly, and I would have executed for a 2-day maker, bing, bang, boom, see ya. And because there was so much volume and so many orders going through, my broker Fidelity, just stopped processing orders, and my hands were tied. I literally could not sell the position. And next thing I know, my 2-day maker is, a month loser, or however big it was. And there was nothing I could do. No stop losses to be placed, nothing. I just had to wait until the market makers caught up enough to be able to put my orders through. And that alone was enough for me to say, same thing. When red flags like that happen, or anomalies, whatever you want to call them, same thing with, not Luna, same thing with FTX. Like, I have been so adamant about keeping my money on an exchange that I really dislike in Coinbase, but I've been doing so for a reason. And then FTX happens and reminds me, oh yeah, that's why you have that rule, for the 1% chance, the 0.1% chance. So, if I play 100 earnings reactions after hours, my orders are going to go through 99% of the time. But that 1% of the time is the anomaly that can, make all the other times not worth it. I am protecting against anomalies as a trader at this point in my career. I have to be defensive against those anomalies. The risk and reward of putting, 6 figures on an exchange that is not licensed in the US, but I can short there, but it doesn't have FDIC insurance. The risk is just not worth the reward. That was a ramble. All right, one more request. It started with an R. RSRUSD, RSRUSDTP. So it's doing the same thing as Bitcoin, at least on the daily. Bear break, no follow through, fairly sideways. We've got to get over 3913 to get this daily bounce underway. Keeping in mind, we will just be scouting a daily lower high and watching the bounce retracement side. Can we bounce big enough to create space for a trend change attempt, or is it a weak bounce that results in a bear flag? As far as the longer term time frames, bulls have to set a monthly. Got to confirm the first monthly uptrend ever by holding 265 and breaking 588. And to confirm a monthly uptrend, we've got to confirm, or to confirm a monthly higher low, we've got to confirm a weekly uptrend. So we topped out, we lost the weekly uptrend, and now we must regain it for the monthly higher low to be set. So again, quick wrap-up takeaway here before signing off. And again, appreciate the likes and supports and all that. We're looking for short-term bounces. I'm looking for a daily bounce on Riot and MARA. We're looking for short-term bounces on these crypto names that have dropped notably. Because we have bounced a bit, we have to be more cautious, which is exactly why myself and many other traders scale out into the initial bounce. To be protective, because we know, RSI was a big reason for why I was entering on Friday, because of the super stack of all those names being oversold. And as soon as those RSI levels cool off, my reason for being in the trade significantly diminishes. So we can absolutely see bear flags result in lower lows, which again is the reason I'm not sticking with this ETH trade. It might end up working out. Maybe ETH is going to bounce back up to 1900. But I don't have enough confidence. There's not enough telling me right now that we should be looking for this bounce. I've got 4-hour EMA 12 as resistance for days. Get over that, that'll be the first sign of something shifting. But there's nothing saying that we can't just keep grinding to lower lows. And again, the last thing I want to be doing is trying to manage a trade long that is just keeps grinding to lower lows. The easier way to be looking for a long is saying that's either the low or I am wrong. Because then we have a very clear if-then statement. If that's the low, then this trade is going to work out as a bull. If that is not the low, then I'm going to stop out. Versus, trying to scale in when we're not in extremes, when we have short-term bear momentum. So I'm okay with, bulls trying for some longs after the size of the drop last week, but you've just got to ensure that you've got that, cut it point, just like I did. I will gladly take that small loss to ensure that I am not underwater on a trade and trying to tread water and salvage it for the next 3 days. And there are plenty of times where I've been in that scenario where, all right, I sell partial, but I still have some and I can re-add it back lower and knock my cost basis down. And that works in some environments, but in other environments, it is so much better to just take that small loss and cut it. I am more confident in scouting the daily lower highs from here than I am scouting the daily bounces from here. And the reason is the daily lower high is going to be a clear most likely scenario. And we will then zoom in and we'll use hourly RSI getting overbought. We'll use the short-term uptrends being lost as an indication for the longer-term lower high. And we'll have all these puzzle pieces to try and pinpoint when that daily lower high is being set. Trying to pinpoint the bounce at this point is a bit more difficult because I'm less confident that a bounce is the most likely scenario from right here, right now. Again, we definitely easily can bounce from here, but I don't have a whole lot of confidence in that after the weak bounce attempt over the weekend, The bear flag's confirmed. And we also got to watch the NASDAQ and the earnings reactions to Microsoft, Meta, Google, Amazon. I keep saying it, but the NASDAQ is in the tightest range of the last 3 weeks that we've seen in years. And we know that that means volatility is coming. You look at this little month-long range. It's been an extremely boring month as a trader in stocks. That's why I go to Riot and MARA and these more volatile names, because they give me the volatility that I need as a day trader. If it was only SPY and QQQ, I would be taking the month off. But we know a break is coming, and it's either going to be a clear, look at SPY, the S&P 500. It's either going to be a clear resistance rejection into weekly consolidation, which we haven't seen in 6 weeks, 5 weeks, or we're going to break resistance. So just have to be cautious and watch to see what the broader market does this week in response to earnings, because it's going to impact sentiment. It's not necessarily going to impact, tick for tick correlation to Bitcoin, but if we start to see risk-off sentiment in markets, in the stock market, it very easily can translate into further risk-off in crypto. And obviously the last week has been risk-off in crypto. All right. Appreciate you all. Got to wrap it up here and do a Chart Guys live stream. I'm going to be live tomorrow morning publicly on this YouTube channel at 9 a.m. Eastern. I will check in on crypto. It'll be mostly stock market focused, but just giving an example of how I do my pre-market prep, how I analyze the market as it opens. So that'll be from 9 a.m. to 10:30 a.m. right here. And I'll see you there. Appreciate you watching. And do good things. Do a bunch of good things. At least 7 good things.